Have you ever heard of the wealth gap? There's a good chance you have. I have. So I found this little Gallup poll that was done recently. US stock ownership is high but unequally distributed. Ownership is high but unequally distributed. If you see right here, it talks about 62% of US adults own stock in one way or another. In one way or another, 62% own stock. But here's the discrepancy right here. It says, let's see, according to Gallup, 87% of US adults with a household income of $100,000 or higher own stocks. So the number goes higher once you get to those higher incomes. Among those with a household income of less than $30,000, stock ownership falls to just 25%. So think about that. The people who have the larger incomes are the ones who own stock in one form or another. The ones with smaller incomes, a smaller percentage of those people own stock. So the wealth gap, it would seem, is due to maybe access or I don't know if it's access because there's so much information available. And quite frankly, that's one of the reasons I started doing this is because I wanted to hopefully introduce people to something that would has historically helped people grow their wealth. And today, you absolutely don't have to have a lot of money because now you can buy fractional shares of mutual funds. Um, Fidelity, for example, you don't have to have put enough money in to purchase one share of a particular mutual fund. You can buy fractional shares based on however much money you can put in. So the access that once wasn't there, quite frankly, is there for anybody. And so when you talk about the wealth gap, that absolutely contributes to the gap because the people who are already making more money, the larger percentage of them are already participating in the market. The ones with the lesser incomes are not participating on the same level. And, people may say, well, it's because they make less money. Well, as always, there are always exceptions. There are people who make on the lower end of the pay scale, but they got some knowledge from somewhere that told them it was in their best interest to put money in the market, which historically has gone up, even though there have been bear markets, even though there have been times where the market took a downturn. Every time to this point, it has recovered and gone higher. In 2024, if you were not in the market, you lost out on a 23% return in the S&P 500. If you were on the sideline because you were fearful, you lost out on a 25% return in the S&P 500. That is a contributor to the wealth gap. If you didn't participate, you just lost out. And we just have to be aware that that's there for everybody. It is there for everybody at every income level, at whatever level you can participate. You are literally having the opportunity to purchase ownership in hundreds and even thousands of companies whose goals are to make produce services or produce products that people will pay for, and these companies grow. And as a casual, passive investor, you get to participate in their profits. That is what you're missing out on if you're not participating in the market. So, will 2025 have a 23% return on the S&P 500? Who knows? Don't know. Maybe not. But long term, one of the best ways to grow your wealth is to participate in the market, to purchase shares of businesses that are serving our country. Companies whose clothes you're wearing possibly right now. Company whose computer systems you're using right now. Whose electronic devices you're using right now. You can own parts of those companies. You can own shares of those companies. You got a company that you interviewed for and they turn you down. You could literally, if they're traded on the stock exchange or they're publicly traded, you can go buy shares of that company. Say, well, you wouldn't hire me, but I'm still going to benefit from you. That's what this access allows us to do. But again, I know people are fearful and nothing is promised, but and you can't completely get rid of risk. But there's also risk in not participating. There's risk in putting your money in a brick and mortar savings account that's paying you 0.5% interest. There's risk in that because inflation is growing faster than that. As I said on an earlier video, there are trade-offs, however we want to do this. But long term, it's been proven over and over and over and over again that we should all be participating in the market in order to keep up with the rate of inflation, in order to keep up with the cost of goods as they continue to go up, up, and up. So I thought this poll was pretty interesting. That it's what you would expect, but we got to fix that. We have to, even if people just dip their toe in the water, we have to get people to understand that you get left behind. You get left behind financially when some people are participating in the market and reaping the benefits, and you are just, as I said, putting your money in a brick and mortar savings account that's earning 0.5% interest and not helping you to secure your financial future. So give that some thought. Think about that. Regardless of what your income level is, we all waste money on things. There are things that we can absolutely do without and we could sacrifice for the sake of our financial futures. It's just a matter of us deciding that we want to do it. Because if we don't, trust me, there are those who are absolutely taking advantage of it and will continue to take advantage of it. So, in order to kind of fight this whole idea of the wealth gap, let's start doing what wealthy people do. Buy income producing assets that are working even when you're sleeping. That's it. That's all. Y'all take care.